This is the Metal Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, May 1st, 2017. Last week's news was commodity prices were mixed, U.S. growth slowed, and Europe and Asia's growth is accelerating. U.S. steel production fell, yet remained ahead of the past 2 years at this point of the year. Oil rose $3 a barrel to $52. Great news for U.S. energy jobs while keeping energy prices livable. Gas prices are as low as $2 in Oklahoma and just over $3 in parts of California. A long way from over $4.25 a gallon in 2008. The oil rig count rose to 697, just more than double last year's 316 low, as oil prices stay above the $40 mark. The better news is the count is still down 57% from 2.5 years ago, meaning there remains huge upside. Iron ore's price, which declined in recent weeks, steadied as prices held at $67 a metric ton. The largest iron ore producers continue high production rates as global steel production remains high as well. Scrap ferrous prices held steady, and reports that obsolete scrap coming into scrap yards and that of newly formed manufacturing scrap are both slightly down. It remains unclear as to where prices will be in May, meaning they could be steady or slightly up or slightly down. Hot-dip galvanized steel remains steady at $900 a metric ton on steady to possibly slightly less demand. Stainless 304 scrap has not changed for months, remaining at 37 cents a pound. While nickel has stabilized, it has come down in recent months and still could take stainless down with it. Copper rose 6 cents at $2.61 a pound, a 3-week high as global demand remains fair and there remains no major global disruptions, and prices are stable this morning. The 5-year copper chart shows the recent downward trend, yet they're 37% higher than they were a year ago. The 5-year inventory chart shows stabilization, but at a high level, which keeps downward pressure on prices. Aluminum fell a penny to 86 cents, and the 5-year chart shows stabilization near a 2.5-year high. Aluminum inventories continue to fall to lows not seen in about 9 years, putting upward pressure on prices. Secretary of Commerce Wilbur Ross announced investigations into aluminum and steel dumping into the U.S. by China. This will put upward pressure on prices. The Eurozone, whose economy is larger than the U.S. and China, had its business climate indicator rise sharply as past production, overall order books, and export books all look positive. There was major disappointing economic news in the U.S. that the economy grew at a slow 0.7% in the first quarter of 2017, the weakest growth in 3 years. Importantly, it was not all bad news though. The low rate was heavily driven by lower automotive sales and lower home heating bills. Many cars sold in the U.S. are imported, as is some home heating oil, so while factual, it is not as bad as it could be. Importantly, housing investment, oil drilling, and exports were all positive in that data. China's Manufacturing Purchasing Manager Index fell a bit to 51.2, but this was the 9th straight month of over 50, which is expansion. There was slowing exports and slowing employment though. U.S. unemployment claims, while up a bit last week, remain near lows not seen since the 1970s. Great U.S. news. Wall Street closed near record highs as the Trump administration announced an aggressive tax cut plan that will boost spending but could add to deficits. Lastly, it was great to see many of you last week in New Orleans, and our thanks to many of you that came by to discuss this report and the markets. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.